Hi, everyone. Very excited to be hosting today's webinar, which has been incredibly popular in terms of registrations, as you can see. Most importantly, I want to know if you can hear me, and feel free to say g'day in the chat before I get started, because I want to know that you can hear me. Oh, someone's hands up. You can hear? Great. Thank you. Love the raised hand. This is a bit of a different platform, so it's always good to check that things are working the way that we want them to. Well, now that I know you can hear me, we've only got half an hour today, so I want to make sure that you get the most value for your time as you all come in. So I'll get started. Thanks for coming today. ULegal works with healthcare practices to make sure their business is structured properly. We translate legal and regulatory complexity into clear frameworks that help practices operate safely, reduce and long-term value. It's not just about documents, it's about making sure your practice is set up properly to support how you run and grow your business. I like to start my webinars with an acknowledgement of country. So I am very grateful to be here on Kaurna land today, and I acknowledge the traditional custodians of the land that we gather on today, and pay my respects to elders past and present. One of the special things about webinars, of course, is that we all come in from different traditional lands, and I want to extend that respect to any Aboriginal or Torres Strait Islander people that are here with us today. Thank you for joining, and feel free to pop in the chat the traditional lands that you're coming in from, because there'll be a large number of them today, which will be fun to look back at in the chat. As you know, I'm a lawyer, and you'd be disappointed if I didn't start today's presentation with a note to say that this presentation is really for general guidance only. Legal advice should be taken in relation to specific issues that you face in your own practice. All right, well, who am I? My name's Sarah Bartholomeusz. I'm the founder and principal of ULegal. We're a law firm that works in healthcare, so medical and allied health professionals, specifically practice owners, and not specifically, but we love working with practice owners, and we've been running the business for 13 years coming up this year, and I have a wonderful team who I work with, and we are very grateful to support healthcare professionals, because I come from a family of medical and health professionals myself. I'm a bit of a black sheep, I suppose, when it comes to that in my family, but really care very deeply about protecting that cohort, and also creating value for your businesses, which is one of the topics, of course, of today, like how can we build value in your business. I've also written this book, Growing a Medical Practice from Frustration to a High Performance Business. It's available on our website. It's the cheapest way to buy it. We pay for the postage, so you don't have to. And it's also on Audible if you have an Audible credit that you like to use. We're working with a neurosurgeon at the moment, and he says, I don't have time to read. I'll download it and listen to it. So I'm sure that many people on this webinar feel that way as well about their time and the value of audio books. I've also written another book, Leading in Health, which is with the publisher for the final review at the moment. So very excited to announce the launch of that soon, and we'll have a pre-launch page. So if you're keen to get your hands on that before it's launched, or as soon as it's launched, we'll communicate with you about how to do that soon too. All right, this webinar is for you if you operate with contractor or mixed engagement models. You're expanding your services across practitioners, allied health, or psychology. You're unsure whether your agreement reflects the current laws, and you want to scale your practice without increasing risk, or you're thinking about future sale or succession. So this is the practice lifestyles stages. There's 4 key stages that underpin the life cycle of any practice, and all of them are relevant for what we're talking about today. We're working with a practice at the moment to set up their structure for their practice engagement for practitioners properly from the outset. And so, that's someone in the start who really wants to do things right in the first instance, and that really works for us. That is our absolute preference for clients who want to do things right from the beginning. But also, having started a practice myself 13 years ago, I know that crazy startup stage, and maybe it's in scale where you're looking at adding additional team members or adding additional services, that opportunity to have a look at your service engagement model comes into play. Then the 4th stage is strengthen. So we really find that there can be a period of scale and start that is quite crazy, and you're getting your rhythms in place. But the strengthen stage is really where you can set your systems and standards and security. And we find a lot of practices do that after the craziness of scale has settled down as well. We love working with people in that stage, and scale, of course, as well. And then strengthen can be an important lead into the sale of a practice or the sale of a shareholder's shares to another doctor, for example, in a practice as well. So these are the practice lifestyle stages. I like to start my webinars with those so that you can get a picture and work out which stage you're in. And look, if you feel up to it, pop in the chat where you think your practice is up to, and what really you're I was going to say hoping to get out of today. You can do that if you like, but I'll have a look back on those later and look at it when we're doing the questions stage of today. All right, so this is the lifestyle stages, and this webinar applies to people no matter where they are in the practice lifestyle stages. So what I guess what's important is to understand that the reality has shifted. A lot of practices are now operating under models that might not reflect the current law. So there's one of the things about the law where people in different businesses do things because that's how everyone else does things, and the law changes and evolves, and the way that we do things doesn't. And so that's a risk because many models that practices are operating under were implemented many years ago, and at that time those structures were commonly accepted. They were commercially efficient, and they were generally considered low risk. However, what we're seeing is a significant shift in the regulatory and legal landscape around practitioner arrangements. The law has changed, regulator scrutiny has increased, and importantly, the way healthcare practices are assessed from a compliance and operational perspective has evolved significantly. Healthcare is one of the most regulated industries in Australia, and that's challenging for small business. I run a regulated business myself, but it's no longer just a technical legal issue, because these changes directly impact how a practice operates, how revenue might flow through the business, and ultimately how the practice is valued. One of the things that we really love to do at YouLegal is make sure that in the work that we do with clients, that we're helping to add value to your practice. We're not just grudge purchase. Hopefully, we are really working on making sure that having your compliance all up to date means that you're adding value to your practice. So on that note, what's changed? Well, there's been 3 key changes in the law. The Closing the Loopholes Act in 2024, the change to the high income threshold, and also the 12% superannuation guarantee obligation that small businesses have. And payday super, of course, is coming in the next couple of months as well. So, well, why does this matter to you? It's not just compliance. One of the biggest misconceptions is that these reforms are compliance issues, but they're not. These changes directly impact how practitioner arrangements are structured within medical practices. Your practitioner arrangements determine how revenue flows through your practice, how risk is allocated, and how your practice is valued. We are increasingly seeing practices with outdated practitioner arrangements that have structural and compliance risk that we're concerned that practice owners aren't across. We like to give people the sleep at night factor and peace of mind factor, and so that's what this webinar is about. Let me talk to you about those three items in more detail. So closing the loopholes is important because these reforms introduce significant changes to the Fair Work Act relating to determining whether a practitioner is generally an independent contractor or independent practitioner, we like to say, or in reality, an employee. The focus isn't just on what the agreement says. Regulators now look at the real substance and day-to-day operation of the relationship in practice. Historically, many medical practices relied heavily on labels in agreements. If the contract says independent contractor, then that was often treated as sufficient. However, that is no longer the case. Regulators, rather than relying on how the relationship is described in the contract, now assess the totality of the relationship, focusing on the real substance, practical reality, and true nature of the relationship in practice. Getting this wrong is one of the biggest structural and compliance risks that we are currently seeing in the medical within practitioner arrangements for medical practices. These are the types of factors that are now considered when assessing the totality of the relationship. Importantly, no single factor is determinative. It is the overall picture that matters. What regulators are looking at is how the relationship operates in practice across all of these elements. The issue we commonly see is misalignment across these factors, where the practical reality of the arrangement reflects employment, but the agreement labels the practitioner a contractor is really where the risk arises for the practice owner. Sham contracting refers to the illegal practice where an employer misclassifies workers as independent contractors rather than employees to avoid providing entitlements and benefits such as minimum wage, leave, and superannuation. It's actually a lot more common than you think. The changes were brought about by the Act, amending the defence to sham contracting. The threshold was previously that the employer did not know and were not reckless. Now the defence requires the employer to have reasonably believed the contract of employment was a contract for services. To assess whether the belief was reasonable, the size and nature of the employer's enterprise and other relevant matters are considered by the regulator. What this means in practice is that these reforms mean that medical practices must ensure their agreements accurately reflect the way the relationship operates day to day. It's no longer enough to simply describe a practitioner as an independent contract within the agreement. The operational reality must support that classification. Practices should be reviewing how work is performed, how much control exists within the relationship, how revenue flows through the practice, and whether practitioners genuinely operate within operational and financial independence that the agreement says they do. Practices should also ensure that there is a clear reasoning and supporting evidence for why practitioners are classified as independent contractors. Regulators increasingly expect practices, particularly larger or sophisticated healthcare groups, to be able to demonstrate that their classification approach is reasonable, defensible, and consistent in practice. Second, the change to the high income threshold. The reforms introduced a new framework for independent contractors earning above the $183,100 high income threshold. Practitioners above the threshold may issue what's called an opt-out notice. This records an election that the new statutory employee definition framework will not apply to the relationship while the notice remains in effect. However, it's not an automatic out. It doesn't eliminate compliance obligations. There are specific procedural and notification requirements associated with the opt-out regime. Importantly, an opt-out notice does not prevent regulators or courts from examining the true nature of the relationship in other contexts, including payroll tax or superannuation. The reforms also introduced new protections for contractors earning below the threshold. Those practitioners may now apply to the Fair Work Commission to challenge unfair contract terms within services agreements. The Commission may consider factors such as bargaining power, whether terms are harsh or unreasonable, and whether restrictions are genuinely necessary to protect the legitimate business interests. This threshold is widely misunderstood. These are some of the common misconceptions that we are currently seeing across practices. Many practices assume that if a practitioner earns above the high income threshold, the arrangement is automatically lower risk or effectively safe from scrutiny. This is not correct. The threshold does not replace the core legal assessment of whether a practitioner is genuinely operating as an independent contractor or is, in substance, an employee. In practice, higher earning practitioners often attract greater scrutiny because of the size of the revenue involved and the structure of the relationship. Regulators will still assess the operational reality of the arrangement regardless of practitioner income. The 12% superannuation guarantee. Superannuation is one of the fastest growing compliance risk areas for healthcare practices, particularly in relation to practitioner arrangements. A common misconception is that if a practitioner is labelled an independent contractor, superannuation obligations do not apply, and that's not necessarily the case. Under the superannuation guarantee framework, certain contractors may still be entitled to superannuation where they're engaged wholly or principally for their labour. Regulators will look beyond the contractual label and assess the practical substance of the arrangement, including whether the practitioner performs the work personally, can genuinely delegate work, and is being paid primarily for their labour and skills. In medical and allied health practices, this issue commonly arises in percentage of billing models, particularly where practitioner revenue and practice revenue are not clearly separated operationally. This means that even where a practitioner services agreement exists, superannuation obligations may still arise depending on how the arrangement operates in practice. Importantly, the superannuation guarantee rate increased to 12% from the 1st of July 2025, significantly increasing the financial impact of any misclassification. Where superannuation obligations are not properly met, practices may face backdated superannuation liabilities, interest, penalties, and the superannuation guarantee charge. We are also seeing increasing ATO scrutiny and enforcement activity in this area, making proactive review of practitioner arrangements and operational structures increasingly important. Another very common misconception is that engaging practitioners as independent contractors automatically removes payroll tax risk. However, in many states and territories, payments to independent practitioners may still fall within payroll tax legislation under the relevant payroll tax contractor provisions. Payroll tax assessment is not determined simply by the label used in agreements or whether practitioners invoice through an ABN. Revenue authorities are increasingly focused on underlying structural and practical operations of the arrangement. In particular, regulators commonly assess who controls the patient relationship, who issues invoices and collects patient flows, how revenue flows through the clinic, and whether practitioners genuinely operate with financial independence. One of the most common risk areas arises where patient fees are centrally collected by the practice and a percentage is distributed to practitioners. In some circumstances, those payments may be characterised as wages for payroll tax purposes. Importantly, payroll tax is highly structure dependent and different in every state and territory, as I said, meaning the operational reality of the arrangement is often more significant than the contractual terminology used in the agreement. While exemptions, thresholds, and state-specific concessions may apply, practices should not assume their structure is compliant simply because practitioners are engaged as contractors. We are increasingly seeing practices operating under older contractor models or legacy agreements that may unknowingly carry significant payroll tax exposure. And we know that WA have said that they're not going to be particularly active in terms of medical and allied health, but we have seen payroll tax audits for contractors in WA in the health space. So even though they're not actively engaged in that at the moment, they are actively engaged in it from time to time. So if you're in WA and you think that you have a free home run on that topic, please don't assume that. Make sure that you do get the advice that you need on it. Misaligned practitioner engagement structures can lead to inefficient revenue flow, unnecessary tax exposure, or workplace exposure like superannuation or annual leave. And for some practices who've had no agreements with practitioners for 30 years or so, they think they're okay, but all of these issues are risks for them. Reduced profit margins can also be one of the things that it leads to within the practice. Structural issues within practitioner arrangements can also create broader compliance risk and operational risk that impacts the long-term sustainability of the business. From a valuation perspective, buyers are not just assessing revenue, they're also assessing compliance, contingent liabilities, and the stability and defensibility of the practice's revenue model, which is one thing, of course, we know that investors look for. We are increasingly seeing practices with strong revenue performance receive reduced valuations purely because of the structural and compliance risks that exist within their arrangements. So the real risk, if your practice is not structuring arrangements correctly, in summary, I suppose, is payroll tax exposure, superannuation liability, and for some people that can be many, many years, employment obligations like leave obligations and the risk of sham contracting and penalties from the regulator, unenforceable agreements, which we see across our desks every day, and then, of course, reduced practice value, which we know that you're not just in this necessarily for a job. Otherwise, you would get a job. You wouldn't just buy yourself a job, which is what some people might say owning a practice and not focusing on these issues might create. But the issue is rarely that practices intentionally did something wrong. And we find with our clients, of course, that they do want to do the right thing, which is why they get in contact with us. But often the legal framework has changed while the practitioner agreements and operational structures remained the same. Many practitioner agreements currently in use were drafted prior to the recent reforms and rely on assumptions that no longer align with the current regulatory landscape. We regularly see agreements that no longer reflect the way the practice actually operates on a day-to-day basis. This creates a disconnect between the legal documentation and the operational reality of the practice. And that is often where significant compliance and structural risk can arise. The bigger picture is this isn't just about agreements, as I said at the beginning. It's about service structure. Your agreements, billing model, and operational structure all need to align. A well-drafted agreement can't fix a flawed operational and engagement structure. When to act? Look, these reforms are already in effect, and regulators are actively increasing their enforcement and scrutiny in this area. Despite this, many medical and allied health practices are still operating under outdated practitioner agreements and legal structures or legacy structures that haven't been reviewed following the recent changes. This is not an issue that practices can afford to ignore, particularly as practices grow and operational complexity increases. Structural and compliance risk often compounds over time, increases with scale, and can have a direct impact on profitability, succession planning, and overall practice value. These are the next steps that we recommend. So have a look at your practitioner agreements, assess the operational reality, map the revenue flow, identify classification risks, and then align the structure with the law so that you can be legally compliant from the day that you start this. How can we help? Well, we can assist with practitioner service agreement reviews and new agreements, advice on employment structure, payroll tax risk assessments, and governance and shareholder alignment, all of which are important for what we're talking about today, which is the value of your practice and making sure that these changes don't erode that value. We're offering a complimentary call for people who attend the webinar with Daniela, one of the senior lawyers in our team. She absolutely loves talking to people, and it's one of the highlights of her day. So feel free to use this link to book a call with her. I will ensure that all our follow-up emails have a link to her booking link. She's already, since we advertised this webinar, been absolutely inundated with calls. So it might be that you need to talk to her next week, given how booked out she's been. But please know that she is always looking forward to talking to new people. So that's what I'll say about this. Of course, here are my contact details. I'm about to go traveling, so my booking link is there, but there are no bookings available for the rest of this month. Feel free to book in at a later time if it's not urgent for you. What we do for supporting your profile, for your practice, is really these three things is what drives us to make the difference that we make to medical and allied health practices. So really take the time to understand how your practice operates and identify what needs to be refined. That's in the align part of this diagram. We protect practices. That's what we're driven to do, to implement clear practical frameworks that reduce risk and support how your business runs. And then what we do is help strengthen your structure by building long-term value in your practice. So you're not just buying yourself a job by being a practice owner. We don't just prepare documents. We help you build a stronger, more valuable practice. We also have a Facebook group, which is called You Legal for Doctors. If you haven't joined us, please do. Make sure you answer the questions, or I'll be in your inbox asking you to answer the questions to make sure that you fit what we need to be joining our Facebook group, because we don't want people to be spamming in there. We want you to get value from it. I'm going to stop sharing. I've got a minute left for questions. So if I can work out how not to share my screen. Have I managed to stop that? I think I have. All right, we've got raised hands. I think that was from the beginning. do we have any questions? Or are you not able to ask questions? Okay, in the Q&A. Okay, great, you can hear me, so that's excellent. Tracy's at the drawing board stage, so just not quite at the starting your practice stage, so that's great. That's a great time to be booking in for this webinar. I notice we're at time. If you need to go, please do. Otherwise, I'm going to answer the questions that we've got. I'm happy to stick around to do that. David's at the strengthen stage. That's a great stage to be at. I feel like actually that's the stage I'm at in my own practice, David, so I can identify with that. Oh, interesting. Adam says that he won't look at buying a contractor-based business because there's too much risk. So that's something that's really interesting for people who do run that that structure to understand in building your own. Adam says he saw an instance where a business with contractors was audited and got stung as all the independent practices use the head business's CRM practice. So that's an interesting piece of feedback for people as well. Chris says, what if GP contractor works through their own company, which has an agreement with a practice management entity? That is a good question, Chris. And we've recently given advice yesterday to somebody that says that having a company interposed between the practitioner and yourself doesn't overcome all of the risks that you're looking at, particularly the Fair Work Act risks. So it's not the golden bullet, is that the right word, that we once thought it was. The laws changed in relation to that. G says, hopefully I've pronounced your name right, if the medical clinic hiring independent contractors who work similar to employees subsequently becomes bankrupt, does it still owe liability to accumulated unpaid superannuation guarantee and annual leave to those sham contractors? G, it is a good question. It will be something that the liquidator or administrator or whoever's appointed to the organisation will look at, because in relation to the superannuation guarantee, there are some protections for that money that exist in the law. It's actually a very complicated question, and if it applies to you, then do feel free to reach out and we can potentially provide you with some legal advice on that. All right, next question. I can't see a name, but we do not have any contractors right now, but we've seriously considered it. So we're working on a level playing field with our competition that does use contractors. Is the message that it will become not worth the effort to try and create a legitimate contractor relationship since it's getting too hard? One of the models that that's from David. One of the models that we set up for clients is a similar model to a co-working space for practitioners. So where they pay rent or a service fee for the use of services. So I definitely don't think it's too hard. It is expected by a lot of practitioners. And so there can be ways to structure it that protect you to the best of our ability legally. So definitely wouldn't write it off, but many practice owners do find that having employees is working better for their practice. So it's worth trying both probably. All right. So Nicole, what is a contractor? Is a company not an ABM? Do these issues still apply? I think I answered that question about the company being interposed, not being a golden bullet. Again, not sure if that's right. The right way to express it, but it's not. It's probably not what we thought it was in the past with these changes to the law. If you don't have contractors, this is Adam. Don't do it. I think the message is hard for others to unravel the mess that these agreements create. Thanks, Adam. Yes, Bryony, we will be sending a copy of this recording in the next day or so to everybody who's registered. Paul says, if you pay super for contractors, can you still be liable for leave obligations? That's a good question. And it's definitely something that you would look at with it depends on so many factors that it's definitely worth something getting advice on if allied health professionals are in that position, because it's not black and white. So we would need to look at the agreement that you engage with and understand your operating model to be able to provide that advice. But I think it's worth getting, because we do sometimes find that aggrieved practitioners who are leaving a practice, it's one of the first things they ask for. And look, that's just an obligation that small business owners just don't need. Honestly, I am one. I know how you feel. All right, Alexis says, as a GP, we've always worked on percentage of billings. What is the alternative, noting that you've highlighted that this isn't viable? Alexis, I'm not saying it's not viable. I'm just saying the engagement model needs to be reviewed and given advice, I suppose, not just sort of do what everyone else does. But one of the alternatives that some practices own is a room rental arrangement, and we often include this in our structuring. So we love talking to you. I'm sure Daniela would be very happy to talk you through the options in relation to this. All right, Sarah says, is there a turnover limit for this compliance? A doctor I worked for has been told by his accountants the risk is not true because of turnover. Is this true? I do not believe there is a turnover threshold. There is for payroll tax thresholds, and they're different in every state and territory, but the Fair Work obligations apply across every business that operates, from very small businesses. And medical businesses often don't start out super small like other businesses do, because there's such a demand for your services. It's a very lucky space to be working in some instances. All right, Lloyd says, what's the difference between us providing services to the doctor and them providing services to us? So that might be in relation to my comment on the co-working space. If you're providing services to them, it is less likely that they will be seen to be employees, because you're providing a service to them. And the way that arrangement is set out and the structure is created is really important to make sure that it's clearly an arm's length arrangement, because we do see some service arrangements where the doctors are being provided services by the service entity, that the practice still wants a level of control over the doctors, which is where you get into risky territory. Bryony says, thank you. That's very nice. Gillian says, thank you. Alexis, got it. Great. Excellent. Adam says, thank you. Sarah says, so helpful as always, Sarah. Of course, thank you. All right, Mirinda says, how would a room rental arrangement work in a telehealth practice if we move away from a contractor arrangement? Well, if you're purely telehealth, obviously that room rental arrangement is a bit different, but a services arrangement is probably what you are providing to the practitioners. And very happy, I know that Daniela would be very happy to talk to you through the options for that. So feel free to book in with her as well. All right, I'm not going to try and say your name because I'm sure there's a pronunciation, but I will read out. I'm just going to call you Dr. Ola. Dr. Ola says, what about the percentage of bulk billing? Is that still taken into consideration in terms of payroll tax? And the answer to that, Dr. Ola, is yes, it is. And that is where the structure is so important, because it can be that you get to the payroll tax threshold very quickly when you're paying a percentage of bulk billing. It's different in every state and territory, so depending where you are, there might be something that helps with this in relation to payroll tax rulings from your state revenue office. So that is a little, it depends again, doesn't it? Because it really does. But we're very happy to work through that with you. Nicole says thank you. May says thank you. Oh, All the thank yous. Thank you. Oh, Kendall, I'm so happy you came as well. And Sharon, you're very welcome. I think that makes it to the end of our questions, only 9 minutes late. Thank you for hanging around, the people who did. You'll get a recording of this. If there's someone you think will benefit from it, please do send it to them. And we'll be in touch about our next webinar in the coming weeks, which is in June when I'm back from my travels. Thank you for tuning in and look forward to being in touch.